This is Matthew Cratter from Trader University, and today I want to talk about Bitcoin 51,000. I was going to make a Bitcoin 50,000, but it looks like we've really blasted past it, and I still believe that we're on our way to 200,000 or above later this year. It's hard to believe it was just 10 months ago, when I made this video, Bitcoin for Beginners on YouTube. You can see here from the screenshot that Bitcoin was at 7,000 at that point. And I laid out the case for Bitcoin really becoming treated and considered as digital gold. And that's what we see has been happening. A lot of you have gotten on board. I actually just spoke with a guy who sold his house and bought Bitcoin with it. He went even more crazy. He put more money into Bitcoin. He basically put every penny he could into Bitcoin after he sold his house, every penny he could after he paid his rent, after collecting his earnings. So very happy. I know a lot of you have been asking for an update. He didn't want to talk too much about personal details or come on here, but he definitely made the right move. He can probably buy about 8 houses with what he sold his house for, then put it in Bitcoin. And just wanted to do a flashback as well to this video when we talked about Bitcoin FOMO is coming. FOMO is definitely here. We're seeing just huge moves every day, especially in the wake of Musk's Tesla buying Bitcoin. Great looking chart still. We had the big green bar when Tesla bought Bitcoin, or when it was announced that they bought Bitcoin. And now really nice upward, I don't know if you'd call it a pennant or, but this is a really good formation. We've seen this many times in Bitcoin. So this melt upwards, and every dip, especially the dips we saw below 44,000, were met by buyers and by cost averaging algorithms. What's really exciting as well is we are currently very close to hitting $1 trillion market cap for Bitcoin. And the more Bitcoin goes up, really, the more valuable it becomes. The larger the market cap, the larger the institutional investors that could allocate to it. Back when Bitcoin was just 5 or 10 billion, Musk would never have been able to buy 1.5 billion. It would have been, call it 15, 30% of the market, and would have moved the price too much. But the higher Bitcoin goes, the less volatile it becomes. The larger the market cap, the more institutional investors can participate, especially pensions, endowments, and eventually central banks and governments. I should point out that these large institutions are not in it to pump and dump it or for any sort of get-rich-quick scheme. A lot of people have been worried. They say, oh, these pensions or hedge funds are going to buy it, and then they're immediately going to sell it, especially the real money allocators, the pensions and endowments. They tend to have much longer time horizons, and they're very large, and they take very large positions, and they don't like to trade in and out of things. Obviously, hedge funds can trade in and out a little bit more. But people like Michael Saylor, the kind of corporations that are putting Bitcoin on their balance sheet, these Bitcoin are never going to be sold. Michael Saylor is a very ideological Bitcoin maximalist, as perhaps I am as well. And it looks like he's actually buying more Bitcoin as we speak. They just filed to raise another $600 million in debt in order to lever up the company a little bit more and buy some more Bitcoin. And we just saw this morning that the sale of debt, actually convertible notes, which is what they've done a couple times before, has now been raised to $900 million. This will almost certainly have an interest rate less than 1%. And he's investing it in an asset that goes up on average, call it 200% every year. A lot of you have been asking, why hasn't the stock kept track with Bitcoin itself? MSTR is the MicroStrategy ticker. It's what people are doing is a lot of people are buying MicroStrategy as a proxy for a Bitcoin ETF. Easy way to get a lot of Bitcoin exposure, maybe in a retirement account, in a regular brokerage account, without having to figure out the mechanics of opening up a crypto exchange account and withdrawing your Bitcoin to a hardware wallet, etc. But as a result, there's been a lot of appreciation of Bitcoin already baked into MicroStrategy's price, as well as people anticipating that Saylor and MicroStrategy will use every last bit of their earnings that they're able to above what they need for operational purposes, that they'll put it all into Bitcoin. So I did make another video about this that you can read about. But it's important to remember that MicroStrategy is a software company. They are not a pure Bitcoin play, and the stock can get ahead of itself. It can dip behind itself. And so if you want to buy Bitcoin, as I always say, you should buy Bitcoin, not PayPal Bitcoin or Robinhood Bitcoin or GBTC or MicroStrategy, etc. If you want pure one-to-one exposure for Bitcoin, you have to buy BTC. So MicroStrategy, we already know that they're going to be coming in to buy another $900 million worth of Bitcoin. So you can actually front run them if you so choose, and probably get in at a lower price than MicroStrategy has gotten in. And for those of you who've been watching my videos, a lot of you actually, it's pretty funny, have a lower cost average price in your Bitcoin than Michael Saylor or MicroStrategy. This was this report from CoinDesk that just 5% of executives polled by this research group expect their corporations to follow in Tesla's wake and invest in Bitcoin this year. This was sort of spun as bearish news, but I found it was actually an unbelievable percentage that 5% of these companies are considering putting money into Bitcoin. That seems like a really large percentage, especially for where we are. Though I do understand the argument that these are still early adopter corporations, and the fact that a lot of CFOs, or 95% of the CFOs who were interviewed, are still skeptical about Bitcoin, also shows you how early you and I are, and how long this runway really is. But this is still, we don't know the names of these corporations, obviously, but it's presumably billions of dollars that will be coming into Bitcoin this year. In addition, we had another entrant that filed with the SEC in hopes of becoming the first Bitcoin ETF. And when we have a Bitcoin ETF, we just got one in Canada. When we have one in the US, this is going to lead to even larger flows, just like the GLD ETF did for gold in 2003, 2004, whenever it came out. And this will make it very easy for RIAs and other investment advisors to give their clients a very easy exposure, just call it 1% exposure to Bitcoin, in a way that's easy to hold in a regular investment account, as we said. So we should not underestimate this. When this happens, there will be massive, massive flows coming out of retail. And it's almost certain, I think, that one of these gets approved by the end of this year, or certainly in the next 12 months. The SEC has been concerned about liquidity, has been concerned that there is a deep futures market, deep spot markets that are liquid, maybe options markets to allow market makers to hedge their exposure to an ETF, and to make sure that you don't have some problem where the ETF is fairly liquid, but then the underlying Bitcoin is not liquid. Again, this is not a problem now. And so I see no impediments no impediments in the way of the SEC approving a Bitcoin ETF. So we have corporate flows coming, we have high net worth individual flows coming, we have retail investor flows coming, RIA flows. Meanwhile, gold continues to underperform, and as we can see from this Bloomberg chart, a lot of people have been asking me about this. I don't have a behind the scenes explanation other than Bitcoin has been outperforming gold really since 2009, and it is a superior money technology. It is continues to take market share from gold. And we're currently, if gold has a market cap of roughly 10 trillion, 12 trillion, we're roughly at 10% of that once we hit 1 trillion market cap in Bitcoin. All the demographics, as I've talked about in other videos, point toward Bitcoin rather than gold. And when millennials inherit their boomer or Gen X parents' gold, it's almost certain that they will sell it and put it into momentum stocks or something like Bitcoin. My kids use digital tokens all the time in their video games. This is something that the younger generations intuitively get, millennials and Gen Z. And so it's important to realize that if you're investing in gold, you're investing in an inferior money technology, and also one that is very difficult to audit, as Dan Hill talks about in this tweet, or reminds us, it's impossible to audit the entire current and future supply of gold. There's a lot of gold obviously under the oceans and in space, and this gold will be expensive to extract. That being said, we don't even know how much gold is above ground in the world. Most of it, of course, in central bank vaults, which makes it a little bit more difficult to know whether it's really there or not. But as Dan reminds us, anyone can audit the Bitcoin supply from a home computer. You just set up a full node, run the software, or you can just go to Clark Moody's dashboard here and see the, I'm trying to see where it is. Oh, here it is, the money supply, 18.6 million Bitcoin. And we know that will cap out at 21 trillion. So gold, as you know, if you've been following my channel, I sold all my gold royalty stocks and even my Tesla stock last year and moved it into Bitcoin. And that has been a good move so far. The gold Bitcoin ratio, when the chart goes down, that means Bitcoin is strengthening against gold. We can see that this is hitting new lows as we speak, as gold remains weak and as Bitcoin continues to steal market share. This was a fairly unkind tweet from Obi-Wan, but basically looking at the chart of gold versus Bitcoin, saying at some point you have to take the L as in loser. And that is a little bit what the chart looks like, simply because Bitcoin has appreciated so much from a very low base level. This was an interesting piece of news from James Bullard, who's the head at the St. Louis Fed, talking about how he does not think that Bitcoin poses a threat to the US dollar's status as a global reserve currency. And he's probably right about this. This is just another signpost to remind people that the government is not going to ban, at least the US government is not going to ban Bitcoin anytime soon. If the Indian government bans Bitcoin, they put India at a huge disadvantage. And so any country that does this, it's a little bit like banning the internet in your country. You don't want to do it because you give up a huge competitive advantage. Interesting as well to hear Bullard compare Bitcoin to gold. So this shows that the narrative of digital gold, which we've been talking about for 12, 14 months, has really reached the highest echelons. And even Fed officials like this are thinking about Bitcoin as digital gold. Again, I think he underestimates, as a central banker, as someone who's not as young as people in the crypto space, and as someone who's been in this esoteric world of central banking and investment banking, it's important to realize that I think he underestimates the threat. The real threat, actually, ironically, to the US dollar is the Fed's printing press. When you print a lot of something, as Zimbabwe did in Venezuela, you devalue your fiat currency when you print a lot of it. And so, paradoxically, the Fed is the biggest threat to the US dollar's status as global reserve currency. Bitcoin is not a threat, except to the extent that it functions, as I said yesterday, as the only working thermometer in the room. The CPI, all these other government statistics, are highly constructed in a way to show that there's not, or to hide the existing inflation. Anyone who actually pays bills knows that the cost of everything goes up every year, with the small exception of technology. So your iPhone gets better. Maybe it costs the same. It's still very expensive, but the computing power gets better. These sort of hedonic adjustments. Either way, interesting to see Bullard both make it sound like the Fed is not worried about Bitcoin, and also that they're thinking about Bitcoin as a form of digital gold. Does this mean that they're going to try to suppress Bitcoin prices, as the central banks have been doing with gold prices for many years? Possibly. I don't think they're too worried about Bitcoin at 1 trillion. When it gets to 5 trillion or 10 trillion, at that point we could see government attacks on it starting. The good news is that's 5x from here, or 10x from here. So call it 5x from here would obviously be $250,000 Bitcoin, which is about where we should be, maybe $200,000 by the end of this year. Here's the Fed's balance sheet, which we've been talking about for many months, hitting new highs this week, the last reported number. And this is really, this is the Fed printing up new money, buying treasuries and other assets and sticking them on their balance sheet. This is also known as quantitative easing, and this is the environment in which things like Bitcoin do very, very well. So the Fed is knowingly or unknowingly really contributing to Bitcoin's huge rise. Now, it's important to realize that, just a final reminder, that if you feel like you've missed out on Bitcoin, I think it's going to call it 3 million by 2028. There's still gigantic upside. Even if you think it's just going to 1 million, if we're at 50,000 here, you're basically buying $1 million for $50,000. So you're paying 5% of the label price. I think Bitcoin will go much higher than that, but that's a conservative estimate. And even if you think Bitcoin is going to peak out at 200,000 before we have a bear market, you're still buying Bitcoin at 75% off, where it should be trading by the end of this year if Plan B's models are correct, as they have been. And so it's very, very difficult to outtrade these kind of returns. As I've said many times, I like trading momentum stocks. A lot of these stocks are not going to go to the moon, and so it makes sense to trade them. When you have something that really is going to the moon, almost literally, and when you're headed toward hyper-Bitcoinization, where the dollar denomination of Bitcoin is going to be going into the millions, it doesn't make a lot of sense to trade it, especially from a tax perspective. Even inside of a tax-deferred account or tax-free account, it may not make sense to trade it, especially for an asset that's returned over 200% annually, as Corey reminds us here. I should mention parenthetically that Swan Bitcoin, I haven't used them, but they do look like a completely legit company. You can basically send them some money or have the money automatically withdrawn from your bank account every week, and they will cost average into Bitcoin for you. I think it's something like 1% fee to do this. So it's a little bit more expensive than Coinbase Pro, which is more like 0.5% commission, but it does make a lot of sense, especially if you want something on autopilot that will take the emotions out of buying Bitcoin. Great point he makes here, though, that if you have an asset that's going up 200% annually, you need to make, if you're paying taxes, because the taxes are roughly, call it a third, 33% marginal tax bracket, and you can be in a higher bracket, obviously, as well. You need to make 300% trading net of cap gains taxes in order to make what you can get from holding Bitcoin. And obviously trading in and out of Bitcoin is quite difficult. I believe also that trading altcoins, trading other kinds of tokens and cryptos doesn't make a lot of sense as a way of increasing your Bitcoin hoard. If you want to own Bitcoin, you should buy Bitcoin itself, cost average in with money that you can afford to lose. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. Congratulations to all of you who have been holding Bitcoin. It's been an amazing run, and it's only February, middle of February. Hard to believe. We still have at least another 9 really strong months in Bitcoin. And I think we also managed as well to evade a deep bear market this time. So good news all around. If you have any questions or comments, drop them in the comment section below. And thanks a lot for watching. I'll see you in the next video.